Good morning. I'm Boston of BetOnBlackTrading.com, and I'm going to briefly discuss one of the things that is pretty much mandatory that you understand about how I follow price movement in the trades we enter. And you need to understand this just so you can be able to follow me in a trade. We utilize what is called candlestick charts or charting. Basically, what this is going to describe to you is the time frame and how price moves in a candlestick. Time frame is a measure of time that we watch price movement. So basically, one candlestick represents a particular time frame, whether it's 3 minutes, 5 minutes, 10 minutes, 15 minutes, whatever the moderator or whoever is following price movement decides to use. For right now, we're going to use the 5-minute time frame. And candlesticks have an opening, a closing, which is basically the body, and then a high and a low, which could be the body or it could be the wicks on top or below the actual body of the candlestick, or a combination of both. Meaning that this is a candlestick. You have an opening, the body, which is basically price movement between the opening and the close, and a close, or in this case, it being a green bar, which is a bullish bar. You have the opening, price movement within the opening close, and then you have a close. You also have a wick on top, which represents price movement outside of the close, and a wick on the bottom, which represents price movement on the outside of the opening. And all of this is basically what happened in between the opening and the close. Now, your candlestick is going to be either green, which represents bullish movement, or red, which represents bearish movement. And a red candle, price would open here, which is where the bullish candle closed. Move down. Move back up. Close. You get in the picture. This price moved down. Price opened here. Moved down to this point. As it moved back up, it formulated the wick, which is pretty much the extent of how low price went. Closed right here. Body, wick, below, high, and close. I'll do it again. Next bar, opened at the close, of the bullish of the bearish bar. Now, moved up. Came back down. Started in the opposite direction. Came back up. And closed. Candlestick price movement. At the opening, price came up, formulated high wick, the high of this time frame. Price came back down, went back into the bearish territory, all the way down here, formulated the low wick, came back up and closed. This is your basic candlestick formation and price movement and a 5-minute time frame.